Hi there, welcome to Kneppy Invest. Time for another financial year 23 result video. Focusing on ResMed in today's edition. Really excited to be bringing you this video today on this company because I'm a shareholder of this company. Bought some shares about 3 or 4 months ago when the market completely overreacted. And sometimes the market completely overreacts, and that leads to opportunities like me and you to buy these high quality companies at much better value. And I've been following ResMed for well over 10 years, and this was probably the first time I have seen value in this company. And if you've been living on the rock and don't know why ResMed share price took a massive dive 3 or 4 months ago, is because sometimes the market overreacts. In fact, you could say sometimes the market acts before it thinks. And as an investor, that is one of the more harmful things you can do. And one of the reasons why the market overreacts and acts before it thinks is because of wariness of risk, concerns of risk. In fact, the market hates risk. And any time the market sees the risk of a company slightly increase, it's going to overreact. And that's exactly what happened with ResMed because of those fears that drugs like Ozempic would completely, maybe not completely, but harm the fortunes of this company moving forward. So let's get into looking at ResMed and how they performed in financial year 23. We'll not only look at the financial year 23 results, we'll also have a look at the quarterly results the company recently released. Why do I consider ResMed to be a high quality company? Whenever I am researching a company, the first thing I look at is revenue history, preferably revenue per share history. And then if I see what I want to see, and that is revenue per share or revenue growing through time, then I take it further. The next step is looking at gross margins. I also look at net margins and operating margins, but typically I focus on gross margins. After I've looked at gross margins, I turn to return on equity, return on invested capital, and then I end up with operating cash flow, free cash flow, and my final step is looking at profit or earnings per share. Some people start at earnings per share or profit. That's my last step. I want to see if the company can grow their revenue. Because if a company can't grow their revenue over time, then how are they going to grow their profit and stuff like that? Now, you might say, well, they could grow their profit if they can't grow their revenue by increasing margins or decreasing their cost. But there's only so far a company can increase their margins or decrease their costs. But a company can increase their revenue infinitely over time. Now, more than likely, a company won't grow their revenue infinitely over time because infinite is a pretty big number. So this is ResMed's revenue history going back 10 years. I've also included the gross margins in this particular slide. And that's the one red flag I do have in regards to ResMed. The very fact that gross margins have been decreasing through time. In fact, it's probably the most concerning thing about this company. Now, if you focus on the revenue, you see revenue continually increases for this company. And if you look at the quarterly updates from ResMed, you'll see revenues continually increase in every single quarter, or almost every single quarter. In fact, I remember back in 2013, there was one half where revenue actually fell. And that did cause a little bit of concern in the market. But if you take away to that little bit of dip in revenue back in 2013, you can see what, just by looking at this particular slide, revenue has increased from $1.5 billion to $4.2 billion. So it's almost tripled over the past 10 years. But again, gross margins have fallen from 64% to 56%. In fact, gross margins have dropped the last 4 years. I like to see that turn around because this is telling me that there is potential competition decreasing the margins for ResMed, and potentially they don't have pricing power. So that is one thing I'll be focusing on moving forward in regards to ResMed and their financial results. Another thing I look at is return on equity, return on invested capital, or return on capital history over time. Just focusing on the last year can lead you down a pretty dangerous path. So what I want to look, or what I want to see, is return on equity and return on invested capital above at least 10. That's my lower number where I want to see return on equity and return on invested capital. Preferably, I want to see above 20. Now, if I don't see above 20 every single year, that's okay. Now, for ResMed, this is their return on equity and return on invested capital history going back to 2008. So we have about 16 years of history here. Now, back in 2008 and 2009, return on equity and return on invested capital was actually below 10. And then it went up to above 10 in 2009 and has stayed above 10. Not only has it stayed above 10, but generally it has stayed above 12 each and every year. And sometimes, we'll say about half of these years, return on equity has been above 20. In fact, the median return on equity is 19, the mean is 9, while the median return on invested capital is 18 and the mean is 19. The highs for both have been in the high 20s. And both of those years, well, for return on equity, it was back in 2015, and for return on invested capital back in 2020. So obviously, when a return on equity and a return on invested capital can be and is above 10 every single year over the past 15, that's a good sign about the quality of a company. And that's how you get a chart like this. In fact, this is close to a perfect chart in regards to a high quality company. Share price from the bottom left to the top right, particularly between 2013 and 2021. So this goes back to late 2013. Back then, share price of this company was about $6. Now it's around about $30. So for those who have held this company over the past 10 years, this has been a five-bagger for those fortunate shareholders. Now, the only bit of weakness we have seen in this company's share price and the chart has been around those concerns in regards to Ozempic and whatnot. And that happened a few months ago when the share price of ResMed fell from the low 30s all the way down to around about $21. Share price has recovered since then. In fact, the share price has increased by about 33%. Not saying that the share price can't continue to rally from here, but the company keeps outputting good financial results. Those concerns around Ozempic will fade away, and more than likely, the share price eventually will get up to its all-time highs. And those all-time highs were reached in about August of 2021 at roughly $40. So let's have a look at the financial year 23 results for ResMed. Now, some important points to note. ResMed is dual listed. I think the main listing is in America and sort of their secondary listing is in Australia. So all their results are in US dollars. And if you look at the shares on issue or shares outstanding, 147 million in America, 1.47 billion in Australia. I think I have that right. So 10 to 1. So you do have to take that into account depending on what platform you look at. So sometimes if you look at the shares on issue, it would say 147 million, sometimes 1.47 billion. So that's very important, particularly if you're looking at earnings per share and that sort of thing. So all these numbers in this particular slide are in US dollars. I decided not to convert, just look at their financial statements and take the numbers directly from that. So revenue, 4.2 billion, up 18%. And again, when you look at the financial performance of this company every single year, you see improvement from the previous year. Profit up to just shy of $900 million. Again, positive 15% from the previous year. Gross margins at 55.8%. Now, if gross margins were increasing over the past 10 years, I would love a gross margin of 55.8%. But again, gross margins have been falling. And I'd say not only is it my concern or biggest concern about this company, it's probably the market's biggest concern as well. Because in previous years, when the company has released their quarterly results and the market has seen the gross margins have fallen, you have seen a little bit of weakness in the share price of this company. Operating cash flow, just below 700 million. Free cash flow, just below 600 million. And the company does have a little bit of debt, $1.44 billion of debt. But to be honest with you, with the size of ResMed, you would see usually a company have a little bit of debt. So that sort of debt is definitely manageable. Shares on issue, 1.47 billion. Now, if you look at the financial statements from this company, you'll see that they state that the shares on issue are about 147 million, and that is US shares. So you times US shares by 10 to get the Australian shares on issue, which is 1.47 billion. which means that a share price of $28.52, which was the share price at the end of trading on Friday, the 9th of February, means a markup of this company is $42 billion. I have seen that differently or quoted differently in other places. I think it's Market Index, or maybe it's ComSec, which says the market cap of this company is $17 billion. If the market cap of this company was $17 billion, this company would be dirt cheap at current prices. $4.1 billion of equity, which means we now can calculate return on equity, which is 21.8, so above 20, and that's what we want to see. We want to see return on equity above 20. Return on invested capital is 16.6, and you're not really investing in ResMed because of the dividend. A dividend yield of 1%, and that's okay with me. I don't invest in companies because of the dividend. In fact, I preferably like to see a really low dividend yield. I like to see companies reinvest their profit to grow their company. And that's exactly what ResMed has done over the past 10 plus years. Because ResMed is listed on the American market, they are obliged to release their financial results every 3 months, unlike Australian companies who are obliged to release their results every 6 months. So we can see how ResMed is performing every 3 months. I love that. I actually know some people who don't like that. In fact, these same people believe companies should only release their results every year, if you can believe it. And the reason they say that or believe that, foolishly, in my opinion, is because they sincerely believe, you should never sell shares in companies, and people tend to overreact when they see results, which is absolutely ridiculous. Because if you own a business, you want to see how the company's performing. The only way to know how the company's performing is by financial results. And if you don't get results every year, at least every 6 months, how can you know how the company's performing? It's a bizarre belief, but some people have this belief. Anyway, so the main things I focus on when I look at ResMed results every 3 quarters is revenue. I want to see revenue continue to increase, and gross margins. Now, ResMed include gross margins and non-GAAP gross margins. Don't ask me about non-GAAP, some sort of accounting standards. So pretty sure GAAP is the proper or official accounting standards, and non-GAAP is the non-official accounting standards. I have no idea. Anyway, so the main thing here is we're looking at 3 months and 6 months of financial results. So revenue up, that's the main thing, up by over 10%. In the last 3 months, 12%, last 6 months, 14%. Now, if you focus on the gross margins, down. But in the last 3 months, non-GAAP gross margins up slightly. So potentially, we are getting to the point where gross margins are stabilizing for ResMed, and that would be absolutely awesome. Now let's have a look at some valuation metrics for ResMed. P ratio 30. And the way I looked at ResMed, any P ratio below 30 represents possible good value, or at least in the worst case scenario, fair value. So P ratio 30, and it was well below 30 just a few months ago when the market overreacted. Price to book ratio 6. Don't really look at price to book ratio for this type of company. EV to operating cash flow 39.1. Free cash flow yield 2.1%. Probably would prefer that to be a little bit higher than 2.1%, but still, this is a growing company, a fairly value growing company. So free cash flow yield of 2.1% is probably what you could expect for a company like this. And also did a reverse DCF, which I do for every single company that I'm researching for and trying to figure out whether there's good value or not. And if you do a reverse DCF, that is just doing a DCF buck in reverse. What's the sort of growth a company would need to achieve to justify the current valuation? So I looked at the free cash flow for this company, so going a little bit conservative there. And ResMed would have to increase their free cash flow per year at 19.1% to justify the current valuation. Now, again, you might say, well, possibly they could achieve that. And you could say that maybe based off that number, that reverse DCF number, that ResMed might be just a little bit above being fair valued at current levels. Next 5 companies I plan to do in this particular series, and after these 5, I've got about 10 or 11 to go, looking at Calix, Sonic Healthcare, ReadyTech, AGL and Clinuvel, company I've owned for a long, long time. And in fact, I haven't done a video on Clinuvel for a while, so it's about time I had a closer look at Clinuvel. That is all I have for this look at ResMed and their financial year 23 results. If you have any thoughts, any questions, just leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for the video. Have a good day. Bye.